And you're back at the Hall of the Mountain King at orangequant.com. I'm Dennis Hudson, your host, and we have a powerful forecast coming up this week for the week of February 8, 2010. Stick around. You're going to love this. Okay, folks, what's happening this week is that H205 has given us a gift of volatility, much like last week, this past week, except I think it's going to be a bit rougher. And this type of trade is what I would call you have to be stupid not to be able to make money this week. So let me lay this out for you right quick. And I'm going to explain this after I say what to do and tell you why I feel this way. But what you want to do, it seems to me, this week is you want to lay in Monday. Okay, you want to take a position Monday and hold it for about 5 trading days. That is, hold it through Friday, or maybe even you'll need to hold it until a week from Monday. Because here's what H205 is showing us. And I call this you just got to be stupid not to make money this week type of play, because it really doesn't seem to matter whether you go long or short by puts or calls, or I suppose well, you could lose if you're selling option contracts. That could be a bad thing. In fact, pardon me, in fact, if you're on the sell side as an options writer this week, I strongly suggest you shut down the autopilot on your automated trading program and grab the stick and fly that puppy yourself. Because if you don't, you are going to be sitting there in the ER as they stitch you up, remembering these words. Your automated programs perform in a very lousy way in extreme volatility, and that's what we're looking at coming up. It's going to look something, according to H205, it's going to look something very much like this. It's either going to be down and up and down and then down and then up, and it's going to be all over the map, and that is going to eat you alive. Or maybe it's going to go up and down and then up and then down and then down again. It's going to be something like that. That's what H205 is telling us. And the reason I say that, as you can see, I've marked one inflection out here. This happens to be Friday the 12th. This inflection, I'm going to put a green dot there. There you go. That's Friday the 12th. There are 2 or maybe even 3 other inflections during the week. That says volatility, writ in large letters all over it. So, what I am suggesting is that on Monday, if you see it open and then going up like that, pick the extreme upper point as close to the upside as you can and short it. On the other hand, if you see it go down on Monday, then you want to get down near the extreme low end and go long, because within a day or two of this of Monday, you're going to get this reversal in one direction or the other. Now I'm going to review that real quickly to show it again on a clean screen and show you why this works and what the risk is. There's about a 15% risk that it's not going to work the way I say, and you need to be aware of that, and you need to keep your position small and don't bet the farm. Okay, in these 2 examples that I'm showing here, this assumes that all goes according to plan as H205 has laid it out. And let us say, for example, that you, this is Monday, the first day is Monday. Let's say, for example, that towards the end of the day, you shorted it right here, up there towards the top of it, okay? You will get your exit opportunity sometime during the week, though you may shake in your boots on Tuesday, but your exit opportunity should come along later in the week. Similarly, in example 2, let's say it opens Monday and goes down like that, and you enter long down here somewhere, or maybe not quite that far, say even there, you will get your exit opportunity if H205 is correct, and there's about an 85% chance that it will be correct. Now the 15% downside risk, as illustrated here with all these black candles, is that it will trend, it will provide inflections, as you see. Those are inflections occurring, but it's in a trending mode. So that would cause you problems if you were on the wrong side of the trade. Let me flip that over. In this case, though, you'd be, if you had entered short, believing it was going to, reverse that way, you would have trouble. Let me flip it over, and you'll see what it is if you had entered long. So now you can see what happens to a long entry in a situation like this. But this is about a 15% risk, and that's why you keep your trades small, because risk is defined not as probability. Risk is defined as probability plus consequence. So if you have a small trade, you're not too worried about it. Now if you're doing options, you should expect somewhere along the way here to make at least a 3 or 4 bagger, I would say. Straight up trading the ETF, I don't know, you might have a 3 or 4% gain, something like that. But whatever you do, if you keep your trade small, you can take advantage of whatever's going on during the week and jump back in for a second bite at the apple. So just pick a spot on Monday at the extreme of whatever it is and hang on for about 5 days, and you should do quite well. Now, here's another goodie I want to share with you, and that is the weekly chart on the SPY. In an earlier video it says weekly something. We had forecast the week of February 15, and the way we did it, because we're reaching so far back for the trend lines on H205, it still looks like February 15 to me, but it could be off a little. Anyway, I thought you would enjoy having just a plain H205 plot to play with for yourself, and there it is for you. You can draw your own trend lines on it, and then just hit print screen and paste it into your draw program and play with it there, and you'll be able to figure out where the next inflections are coming. And that is not a pumpkin, that is an orange. And we're orangequant.com. Good luck to you. You're rich and we're not. Well, maybe a little. Anyway, we'll leave you in the Hall of the Mountain King.